Welcome back to Talkpoint. Today we focus on a major economic update. The latest consumer price index data shows inflation is finally showing signs of slowing. After months of rising prices, particularly for essential like food and energy, this is in quote to bring some relief to consumers and investors alike. Let's take a closer look at what's happening and what it means for your wallet. Infographics showing inflation trends over the past 12 months, highlighting food and energy sectors. Inflation measures how quickly prices are rising for goods and services. The Consumer Price Index or CPI is the standard gauge. Recent data indicates the overall inflation growth has slowed slightly this month, with food and energy prices showing the most notable declines. While prices are still higher than pre-pandemic levels and the easing suggests that could upward pressure on household budget may be moderating. Clips of grocery stores, gas pumps, and household budgeting. For everyday Americans, the change is already being felt at the grocery stores and the pump. Staple food like bread, meat, and dairy are rising for slowly, and energy costs, particularly gasoline and home heating, have stabilized. Experts say this slowdown may provide some breathing room for households that have been grappling with rising living expenses. The slowing inflation also reflects broader economic trends. Supply chain disruption that fueled earlier price spikes are easing, and global energy markets have stabilized after months of volatility. Analysts point out that while this does not signal an immediate end to inflationary pressures, it is a positive indicator that price growth may be gradually returning to more manageable levels. Footage of Federal Reserve officials, economic charts, and Wall Street reaction. The Federal Reserve monitors inflation closely to guide interest rate decisions. Slower inflation could influence future monetary policy, potentially reducing the need for aggressive rate hikes. Investors react positively to the CPI report, and with stock markets showing gains and bond yields stabilizing. This easing could also boost consumer confidence, encouraging spending and investment. Economists cautions that while the trend is encouraging, inflation is not fully under control. Some sectors like housing and healthcare continue to see price pressures. Nevertheless, the slowdown in food and energy cost insignificant because these areas impact virtually every household, and their stabilization can have ripple effects throughout the economy. Animated scenario showing how slower inflation affect wages, savings, and purchasing power. For families and consumers, slower inflation means your paycheck can stretch a little further. Raising prices put pressure on savings and daily expenses, so even modest relief in key access areas can improve financial stability. Analysts say this could also reduce the urgency for district spending cuts by households, allowing for steadier economic growth. The latest CPI report is a sign that inflation may be easing, offering hope for both households and markets. While challenges may remain, particularly in housing and healthcare costs, the slower growth in food and energy prices is a welcome reprieve. Americans and investors alike will be watching closely as the next reports reveal whether this trend continues. Thanks for watching. Comment below, have you noticed prices easing in your area? And don't forget to like and subscribe to Talkpoint for daily updates on the economy, politics, and current affairs.